Hello traders, welcome back to Easy Forex Strategy. Today in this video I will show you this lovely indicator that will help you to save time and also you won't be stopped out easily anymore. So those losing days will be reduced after watching this video. So if you stick around you will know everything that is needed to start trading like this. I will also show you how you must trade this indicator with pure price action. Because this is not a lagging indicator. 83% of my viewers are not subscribed to the channel. Please consider subscribing because it will help the channel a lot. And I will keep providing you guys with some trading tips for free. And lastly, more examples of this video will be posted in the Telegram channel that will also help you to engage more with this video. The link to the Telegram channel is in the description below. This is helpful for scalping in the 5 minutes time frames and even in the 15 minutes time frames. Another thing is that you should also know the direction of that market you want to trade. Because I noticed that it works well with the trend. Firstly, let's start by explaining this structure before we move on to a real chart. In Forex market we have what we call market sessions. So during the Asian session the market will consolidate. Then after that when it come to New York session the market is likely to take out both previous sessions highs and low. And from this example we can see that our supply zone here is inside the Asian session. So if you take a trade during the Asian session, you are more likely to be stopped out. So by using this Asian session indicator, it will help us to see the session clearly and faster. Because time is money, bro. This is the bullish market point of view. Also guys, another thing that will help you to understand this video 100%. You will have to watch the video in the description below. Because it will teach you every entry strategy with the smallest stop loss. Okay, from here in this example. Let's say you have the demand zone here. And then it confirms your entry. So you will see that you are stopped and you start to think that the strategy doesn't work at all while you have entered during the Asian session. So this video will help you to avoid those kind of mistakes and to choose the correct supply and demand zone. This indicator will create those Asian sessions for you. Now I will show you how you can add this indicator on TradingView. Also, if you are new to trading, TradingView is free to use and you can download it even on mobile device. I will leave a link to download for free on all devices. Here on TradingView. On the menu bar, you will click on Indicators. Then this menu will pop up. Then here on the search bar, search for Asian Range by Nico. Then click it. Then you're done. The indicator should appear on your chart now. After having this indicator on the chart it will show this shadow graph. This is how you can spot the highs and lows of the Asian range. And from this example I will show you step by step with full details. If you have watched the previous video then this video will be very simple to understand. Because by now you should have some basic entry strategy knowledge. But if not I will still make sure that you understand. Here we have our trading plan. And as a trader you should have a trade plan or something that will guide you on your strategy. Because it will have all the rules for your own trading strategy. But for this trading strategy we will use this trade plan because now we have an indicator on the line. So from this area we start by finding the highs and lows of the Asian range. And we can see that the high of the Asian range was taken out. Then the next step is to find supply zones to sell. And target the Asian range low. I don't think I have mentioned that before, but the market if it wants to go up, it will first take the liquidity on the low of the Asian range and vice versa. And from here we can see that we have two supply zones above the Asian range high. But this one here it didn't confirm because price traded above it before closing bearish. After drawing the supply zone on the chart. The next step is to wait for the market to touch the supply zone and close with a bearish candle. This will confirm that the market is trying to reject that price level. And as we can see, this candlestick touched the zone and closed bearish. After price has confirmed our bearish trend, then we will decide on how to enter the market. From that video I have mentioned that we can enter on the close or on the retracement. And because price confirmed here we can do a retracement entry here. Then we will put a horizontal line on the retracement level. For in case if the market comes to that area we can sell. Your entry should look something like this. But what about those who want to enter when the confirmation candles closes? Because we know that price confirmed with this candlestick. The market could have traded up for a bit before it traded bearish. Entering on the close of a candle is not worth trading in my side. Because I like to reduce the risk as much as I can to have a better risk to reward. From this example we can see that during the Asian range here the market was just consolidating. And we can also see that during New York session here, the market traded higher to take out the Asian range high. But what is left is the Asian low, which was not taken out. So to make a trade, you will need to find a supply zone to try and enter the market. And your first take profit targeting the Asian low. And here we can see that the supply zone here. And then the market touched the zone, followed by a bearish candle close. And we can also see that the market did not have a retracement entry. So if you only take retracement entries, you're most likely to miss a lot of entries. Don't even stress. Because this will also teach you to be patient as a trader, and you don't have to trade everything, bro. Now look at this. This trade setup is for someone who took the entry on the close of the bearish candle. I have to point out something, that sometime the high or the low of the Asian range is not taken out. For example, here we can see that the market dropped lower without taking the Asian range high. If you are enjoying this video so far, please leave a like and comment below. From this last example, we can see that this Asian range high was not taken out. So in simple terms, guys, when you see an Asian range high or low that is not taken out, just check the levels of demand and supply. Then that will be a hint for you to enter the market. From here we will start by drawing our demand zone. We have spotted our demand zone here. Then the next step is to wait for the market to drop lower and touch the demand zone without invalidating it. Now we can see that the market has touched the zone with this candle. Then the next step is to wait for the market to close bullish at the demand zone without trading lower than the demand zone. Now that price has confirmed our buy area, the last step is to identify where our entry will be. And in this case we can choose. From here we can choose between this two buy area. Or you can also enter the trade on the close of the bullish candle. Your trade setups will be like this. If you have reached the end of the video, but you feel like you need more information about this trading strategy and more examples, then just come to the Telegram channel. You will find the PDF to this video. Okay guys, I guess I will see you on the next video.